Welcome back to another episode of the Lofty Lenders Homebuyer Education, where we explore tips, tricks, and stories to help you plan for your next home purchase. Whether you're a first-time buyer, a move-up buyer, an investor, upsizing, downsizing, or whatever, you're in the right place. Today, we're diving into the trap that many homebuyers fall into, turning to Google instead of their lender. So let's talk about search engines and how that really, unfortunately plays into the pros and the cons of buying a house. So Charlie, is Google your loan officer?
No, you can't do your own loan officer when you're the loan officer, because then there's emotion involved too. Emotion clouds everything.
Fair. Well, I think the biggest point, or the reason we want to do this episode, is because Charlie and I have definitely seen a lot of people turning to Google and asking questions about, what's out there, what's in a mortgage, what's in a loan, how do I understand, what's going on, and I totally can appreciate that. I turn to WebMD and Google and all that stuff before I actually go to a doctor. So I can appreciate that. But it just like WebMD basically says everyone has cancer, mortgage loans on the internet are all going to tell you all about the stuff that's going to get you to click me, buy me. And it's not necessarily going to show you truly what's specific to your situation.
Right. And I think that's really the big challenge we see is like you can maybe get the right question with a reasonable answer, but it's one piece of your puzzle. I mean, you might have 4 or 5 pieces. A lot of people have a dozen or more pieces, and trying to clearly ask those questions concisely and then getting a response that's going to go along with it. It's tricky. I tell everybody, I think you do too, please don't ask us to write an essay. We're not great at it. But when you've got a money puzzle, we love money puzzles. That's what we're good at. And it's knowing what the rules are, knowing what you really could do versus should do. There's a lot of personal preferences, and you just got to finesse it just right, and it takes several conversations.
Yeah, I think the biggest question we want to address today is, why shouldn't I just Google all of my mortgage questions? Or why shouldn't I ask ChatGPT or Gemini or whatever AI out there? And, you've heard me talk in the past. I love AI. I think AI is amazing. But AI needs to be harnessed correctly in order for it to make sense and work out for situation. You can Google, hey, how do I get down payment assistance? But that doesn't necessarily mean the answers you're going to get back, or even ChatGPT, the answers you're not going to get back are going to make sense for your situation. Maybe interest rates are higher for the down payment assistance program, so your loan officer's thinking about that. Maybe you're looking at a program in Tennessee that has nothing to do with Iowa, and ChatGPT is pulling it in saying how amazing it is. You get all excited and then find out that it's not even available here, which is very common.
Yeah. Well, and even some of them that are available, a lot of the assistance programs are grants and they run out. And so, yeah, it's a correct answer, but that money, it's already gone. And that's a possibility. You could maybe wait in the future, but you need to understand that. And that's where it takes a lot of us searching, because some of the stuff that we search, you and I found this. You've been trying to build your own bot to get the right answers to underwriting, but there's always little admin changes or overlays or just the technicalities of what an auditor is asking for currently. And a lot of times that's behind a secure wall of a login, which then AI is not able to reference a lot of that stuff. So, and rightfully so, we don't want them in everybody's private servers, but it's very cool to get some ideas. And especially after you talk to us or someone else, use AI to double check what we say. Look up stuff that you didn't know about. We love the resource. It's just pulling the pieces together.
Yeah, and I think Google and AI serve up generic answers. And AI can be a little more pointed for your situation. But the other day I was using AI to look up a guideline, and I came up with something, and I thought, oh man, Charlie, this is really cool. This program with FHA I've never heard of. I got to go research some more of this. I need to learn more. This is going to work perfect for my customer. And I got all the way down this rabbit hole, and then I found out that the program was discontinued back in 2005. And it's
but
something
the data's out there.
The information, anything that lives on the web is out there forever, right?
Yeah.
So, and it looked like it was this great thing. I went to the underwriter, and she goes, wow, I've never heard of that one. Let's check it out. Oh, yeah, that's before my time underwriting loans.
That's awesome. Well, we had a coworker that used an AI through a system or through one of our investors. So on their guidelines and on their overlays, it was still off. And so it was a pain in the butt because it was a very sticky situation. I mean, easy situations, that's one thing. It's a lot easier to get the right answer when you're a little more generic or less complicated, but we all have those little things and complications. So Yeah, devil's in the details.
And I think another thing is what might work for one person doesn't necessarily always work for
Oh,
everybody, right? And
yep.
somebody talks about, oh, this amazing program that I got into. They go out, they post it on Reddit, and then somebody else reads that and says, oh, I'm actually in that same state. I can probably apply for that. I can get that too. But I make 3 times that person's income, and that person didn't post their income. And I'm not going to say what my income is, and I don't actually qualify
Right.
because I make so much money. So there's just everybody posts about their specific scenario and what worked for them because that's all they know. But at the
Yeah.
same time, there are just so many other things out there that that's why we say every loan is unique to you. It's not
Yeah.
necessarily unique to everyone.
Yeah. And I think a lot of people, when they hear us say, you got a special circumstance, or, your situation is just a little different than the person I talked to an hour ago. A lot of people think it's big stuff, like you had a medical issue, or you had a car get repoed, or a foreclosure in the past. Not really. Like, I have some really good friends that have done well. They'd pay off their debt, and unfortunately, their credit score is terrible. They closed everything. They had no open and active accounts, and they didn't realize it was going to hurt them that much. And so, having that dilemma, that's a very different scenario. But in general speaking, it's like, I make good money, I have no debt, I'm a great risk. You're missing one piece. And it was a fairly easy fix. But again, that's not something you would have searched for. I don't have any open accounts. How can I get the best mortgage? That's not what you search.
Right. And kind of going back to, what makes sense for you may not make sense for everyone else. I mean, it's kind of like if you're going to go out and take it out of a mortgage, right? We're going to say, I'm going to go and figure out how to cook a turkey. And I find this perfect recipe. I get it all done. And it says, remove the inside of the duck and place it off to the side. Wait a minute. Wait, I thought I was cooking a turkey. You ended up with a duck recipe, but you got, so far down that rabbit hole, you clicked a link, you thought you had the perfect recipe, and turns out you were smoking a duck and not cooking a turkey. So
Yeah.
you just really don't know until you know, right? And even there's certain situations where Charlie and I are researching and we find out, hey, there's a new program we didn't know about. Let's go figure this out. Let's go find out more about this and see if it's going to fit for our consumers because that's that's always better, right?
Right.
And there's always new stuff that comes about. But we also have to do that research to find out truly does everybody fit that program.
And right now, I mean, in our current history, it is a perfect example because the guidelines aren't necessarily changing. The guidelines are there, but the interpretation is not. And so you may have a law passed, whether it's mortgage or driving or otherwise. The administrative rules, which is where a lot of people don't realize, like the law is vague. So you got to take and read between the lines, what's in here, what's in here. How is the police officer going to enforce that? It might be different from county to county. The same thing goes on the mortgage side. Like there's a lot of things that if an auditor says, I need you to jump, and they don't know, it's like, well, am I jumping up? Am I jumping back? Am I jumping forward? And so a lot of people get a little nervous until they either get in trouble or get clarity. And normally you get clarity by getting in trouble. And it's not always big trouble, but they're like, hey, we meant this. And it's like, that's not what that said. And so we have a lot of that right now, especially like variable income. People have side gigs, all the things that are standard for our society right now, or much more standard. They're not standard 5 years ago. And so there's still a moving target. And we're starting to see some people have some delinquencies. And then therefore you have that interpretation change again. So the research we do, as much as we do online, as much as we do through any type of searching, we still have our direct contacts. We call and say, okay, is this what you're still seeing? And so we do the exact same thing we're asking you to do. It's like, we know we're 90 to 95% confident in what we do, but we're not just going to assume that 5 or 10% hasn't changed.
Yeah, and thinking about a real life example of this, I had a customer who called me up and said, "Hey, I don't think I can buy a house. I don't have 2 years on my current job. My credit score is under 700, and from everybody that I've talked to in my area, they've all had those things. So I don't think I can buy a house. I just wanted to find out, like, what do I need to do? How do I do this?" And they were at a 690 credit score and they had a year and a half on the job or something. I was like, you're still
Great.
knocking it out of the park. You're way better than what you realize.
Yeah.
And it's just all these things that, again, it's who they were talking to. It's what that person was saying next to them. How many times have you said, well, my neighbor got this, Charlie? You need to give me that.
Yeah.
I could have, if I had a nickel for every time I heard that, I'd have at least $1, I think, maybe two.
But again, common sense doesn't mean that's how it works. But that's how we think. And so we just need to take and get it through our heads and then your head, and we can have that conversation and show you the whys. And sometimes the why, when you can explain why going around this way is what is being looked at, it's not what common sense says, but when you look at it going backwards, like, oh, okay, that makes sense. And we've got some right now. There's money movement is always a hard thing to question. So you have gifts or you have just things that aren't necessarily clear. And when people who make $50,000 a year have a $20,000 deposit, they think nothing of it. Well, I just got $20,000. Well, in our site, it's like, we need to know what that is. Are you doing something illegal, or was it an inheritance or a gift or something that's totally fine? But those anomalies, and they don't have to be that big. Right now, Venmo, we talked about that before. But some of these small transactions that are just, they're kind of new. And new doesn't mean last week. It could mean the last few years. But the repercussions of, how it's happening for the system just means different rules. So we're here to help. There's lots of little stuff, but we can look at what you've got and only give you the information appropriate for you. And that way we can kind of weed out some of that noise.
So getting into current events here, I think one of the things that a lot of people notice is they go on Google, you watch the news, whatever, and you see interest rates are coming down. You hear this, like I say, it's all around us, right?
Yeah.
Oftentimes that happens 1, maybe 2 weeks after rates have actually come down because maybe they're following the Fed rate, and that's what they're announcing, or they're, the news is reporting on something. And it's always a click me, buy me, right? There's always a reason that they're talking about this because everybody is excited about rates coming down. So everybody's going to tune in to learn more. Nobody wants to, you never hear a report of, oh man, rates are up today. No, they don't really talk about that. They just talk about when rates are coming down. So when you read and listen and hear things that are saying rates are coming down, you think, man, rates got to be at 2% by now because all I hear is rates are coming down. You didn't hear about the rates that went up every other day.
It went here and then went up to here. And then a week later, rates are coming down. Well, right. But it went up in between.
Right. Yeah. So, and then the other piece of it is, AI is great, but it's still giving old data. They talk about AI slop and the videos that Sora is producing and all the junk that's out there. And it's just it's okay. It's not great. But at the same time, it's also pulling some old information. The other day when I was on the free version of ChatGPT, I asked it, what are the going rates in my market? And it pulled stuff from back in 2020, 2021 that said interest rates are at 2.5%. I'm like, this is clearly old information. But if I'm a first time buyer out there and I see that, and then I call up a loan officer and hear him or her say 5, 6, 7%, I'm going to hang up and I'm going to call somebody else because I'm not going to believe it. Right.
Yeah.
And so it's all about understanding your personal situation, but also understanding what you're reading and making sure you get that what's out there isn't necessarily always accurate.
Think of the clickbait that we see. I've seen people advertising in the 3s and low 4s right now, which is no. But if you see that data and then someone has a BS ad that could be over in La La Land that's going to steal your information, they just want you to put your information in. Yeah, no, that's a bad mix.
So a few actionable takeaways today. So first off, start with that pre-approval conversation. Have a call with a loan officer, whether it be one of us or somebody else. Just talk to a loan officer to truly understand your personal situation because ultimately what you Google online, you can find everything. Charlie and I have talked about this in the past as well. Trigger words. You might read something and someone says something about mortgage insurance. I had somebody come to me, Kyle, do I need mortgage insurance? I really want it. I was like, you've got 20% down. You do not want mortgage insurance. You just don't really understand what it is. And you saw that word out there. And so you came back to me and talked about it. So talk to your loan officer, get that pre-approval conversation going and understand, what options fit for your scenario. And then if you have questions, ask the loan officer. If you're second guessing that loan officer, be pointed with AI and ask that question again and see what answers you're getting. My favorite is yesterday I got somebody tell me, Kyle, I went to AI and it told me exactly what you just called me and told me. I feel so much better now knowing that I've heard it from you and also read it online. And I feel like you validated what I read. So having that conversation
Awesome.
is still super important. Secondly, ask questions freely. So again, there's no dumb question unless you've asked it twice. That's what I always say. Keep track of your
And I
notes,
mean,
right?
sometimes your phone cuts out. So the second question
Oh,
there is
yeah,
okay.
fair. That's literally what your lender's here for, is to answer questions. I mean, like I've told Charlie before, my ideal day is just to be on the phone all day. And I get people
Oh,
calling me, asking questions about their situation, their loan, their process. I could be on the phone all day long. I might be exhausted by the end of the day, but I love that. I don't
yeah.
really want to play with my computer much.
No, the computer's a necessary evil. But I'm right there with you because the piece on clarifying what's there, the correct answer sometimes is we don't have the answer, but I'll go get it for you. Let me double check. So just be leery sometimes when you get immediate, fast answers. I'm not necessarily sold because a lot of people don't practice what they preach. We really try hard to practice what we preach. So take a grain
Yeah.
of salt. Your gut feeling on some of these times when you're talking to people or when you're seeing people, that can go a long way.
And finally, use Google for ideas, not answers. That's a big one in my mind. Oftentimes, we get people that'll reach out and they'll say, "Well, I don't want to talk. I only want to text." And it's because they're reading stuff online and they feel like they've got it figured out. And unfortunately, like we've talked about all this entire time, everything out there is generic. It's not
It
specific
is.
to your situation. Until we understand your situation, we can't really give you pointed answers that are going to help you. And those people that just like to text, I'm sorry, I'm not really that scary. I promise. You can call me. I'm going to be gentle. I promise. Um, it's about making sure you understand and you learn throughout the process, not just being pushed along and click me by me.
Oh, 100%. And again, with that, it's so much emotion built into whether you're buying, refinancing, building anything. There's a lot going on. And so the conversations are going to help put that at ease. And it tends to connect the dots better than just reading, a 2 or 3 sentence text. So the variety of how you see it, hear it, repeat it. I mean, everybody learns and absorbs differently. So the conversation, whether you're a big talker or not, the little bit, no matter what's going to help.
And I can always understand, people have feelings that they want to express and they want to, they're more likely to express those on a phone call. If I talk for a little while and you go silent, okay, you're trying to figure out what the heck I just said. I talked a lot there. I need to step back. I need to ask you what questions you have and I can repeat it over. If I send it as a text, maybe I sent it wrong. Maybe there was some demeanor in there that you misinterpreted and you thought I was trying to be rude when in fact I was just, being direct. There's just so many ways a text message can go. So having that phone call and having that emotion is super important.
And who wouldn't want to do like a video call with this? Look at it. I mean,
Yeah.
we're
There's a reason
semi-pretty.
people do video calls with you and not me. So I don't think they enjoy this as much, but that's okay.
Oh, they do.
Well, buying a home is one of the biggest financial decisions you'll ever make. So you deserve to make sure you have real answers for yourself, not just what you can search online. So remember, Google doesn't know you, your lender does. So we hope you enjoyed the conversation today and found it valuable. Be sure to follow us on all social media platforms and subscribe to the podcast. And we'll see you next week for another exciting episode of The Lofty Lender. Take care.